Good morning, folks, and welcome back to Almus Market Mornings. It seems the dollar bulls have finally come out of their long slumber because yesterday all major currencies lost out against the dollar. We also saw good correction in international gold and silver. And interestingly, silver hit one of its highest levels before seeing this correction. And there's more to the silver story, where a physical shortage is occurring in the silver ETFs, and that's resulting in the silver ETFs trading at a high premium as compared to their actual assets owned. Overall, though, we saw the euro break below 1.16. Dollar index is at levels previously seen at the end of July. Morning, JK, you have been calling this rise in dollar for some time. I think our listeners want to know what's next. Also, your take on the correction in precious metals.
Good morning, Swaraj. I think the correction in the dollar as well as the precious metals in the recent days was crying out loud, and it just happened yesterday that dollar broke through important resistance again, and the precious metals after soaring to new highs, silver was previous high at 49.71. It went as high as 51.20, and gold also hit a new high at 4060. Uh, so I think in the morning we had an update on the Hamas-Israel peace treaty, and ideally the precious metals should have actually reversed at that time, at least as a correction, because the safe haven buying was coming off. But then I think it was a market playing on some sort of anomalies, like you said, the silver shortage and the overall sentiment just stressed. Market just got stretched with the stop losses also, and that's the reason why once it hit a certain level beyond the reasonable level, we saw a sharp fall in the gold and silver. Gold was down 2% of the on the day. After hitting, 3964, sorry, 4057, it came back to 3964. That's quite a drop. And the silver also hit 5138 and then came down to 48.56. So both of them were down for the day after hitting new highs, and that's quite a technically seen as some sort of a corrective downward move that is happening. And of course, the mention about the physical shortage in silver, yes, because of the ETFs, pressure on ETFs and shortage of physical silver, which backs the ETFs. Now, these type of anomalies do occur in the markets, and but there are enough marketplace to take advantage of these undue rise in prices. I can straight away recall one thing that happened during demonetization when official gold prices were ruling at 30,000 to 31,000, and as soon as the demonetization was announced, we saw it to soar to as high as 55,000. But this stayed only for 24 to 48 hours because there are enough players to take advantage of this price anomaly. So I think that has got corrected. I think these things will cool off. I think we have seen a very overheated move in both the precious metals, and which probably seen some sort of a medium term high, having silver moving almost 80% in the last 3 months, and then gold also almost doubling from its lows. So I think we can expect more corrective moves. As far as the dollar is concerned, I think the Japanese yen move in the week after the political development in Japan, and also the French political impasse, where Macron is still searching for the fourth prime minister in the last 1 year, is making markets a bit uneasy about holding dollar shorts. And we have been saying that the market is quite short positioned in the dollar on various grounds. And with these developments, and US markets holding steady despite the shutdown which has entered the 10th day now. Uh, while we don't have the economic data, key numbers which will give a fresh insight into the US economy, but whatever evidence that we have had so far, the inflation has not gone through the roof as was expected even by the Fed. And then while employment situation has deteriorated, we have seen the GDP number come higher than expected. Some of the key sectors, barring housing and manufacturing, are holding steady. Consumption is also holding steady. So there, I mean, it's not a economy which is in doldrums. Yes, there was a negative sentiment because of Trump's tariff policies and uncertainties over various other issues. However, market has played that to quite an extent, and possibly there was no new story available to the market. That's why the dollar has seen some good retracement. Uh, I think even the rate cuts by the Fed have been fully priced in, up to two cuts this year, perhaps two in the view of the market next year, but dot plot says only quarter. So all these things make up for the dollar's good recovery that we have seen. Euro was trading at 1.19 immediately after the Fed meeting last month, and then we are now at 1.1550. um, Technically looks more gains for the dollar against the euro on the cards. As far as the yen also, I think 155 becomes a very attractive level, despite the fact that the possible PM designate, the catchy said that they don't prefer a very weekend, and weekend has its own pros and cons. But those statements were ignored by the market, temporarily a dip in the dollar, and then it's back above 143. So I think we are currently in slight dollar recovery environment, and that is set to continue for some more time. And none of this, of course, is also affected the rupee. Rupee stayed steady near 88.80, and we all know that rupee has recently got undervalued, having underperformed for most of the year. The RER being below 100. And the dollar's recovery, at least for now, has not impacted the rupee. And we also know that RBI has been consistently offering dollars at the highs. I think unless we see another 1 or 2% movement in the dollar index, the rupee's weakness can be somewhat calibrated. It won't be calibrated, not very. I don't see a steep fall, but yes, the gradual weakening trend in the rupee is definitely on. It's not going to strengthen until we see definite progress on the trade talks with the US. And um, we have had some positive numbers from the FIS, but that is also more due to the IPO related subscriptions from the foreign investors, which eventually is likely to go out. So no change in the picture for the rupee, nothing worse except dollar index going up. But I think it stays on course for gradual weakness, watching for trade related developments, and also FII flows, as well as the dollar index for the moment from these levels. So I don't rule out 89 plus in the coming weeks. But yes, it's not going to be some sort of a free fall of the rupee that I'm seeing.
Thank you, JK. And it looks like the theme is, of course, continuing with the dollar recovery, because there are a few other things. I still recall what JK had shared in yesterday's podcast, dollar being the cleanest of the dirtiest shirts, because we are seeing, uh, the French politics playing out, the yen's move due to the new almost prime minister elect. So all of that is leading dollar to be attractive. And of course, we have seen over the past year how dollar has been sold off, and there can be some sort of a profit taking over there, and even shorts getting covered. When it comes to rupee, it was steady yesterday, 88.80 being held as a strong resistance with active central bank intervention to cap losses. We, of course, discussed the precious metals, the premium in the silver ETFs, and such anomalies get corrected very quickly, as JK has shared. And we have seen that these kind of stretched rallies, the stop losses can be triggered quickly. And that's what we are seeing. If you look at the entire story of the precious metals and the correction that has happened yesterday, it's all based on stretched rallies, uh, markets coming to a point where there are no further buyers, and then stop losses getting triggered. So we'll look at all of these things in the coming weeks as well. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.